Good evening, everyone. My name is Matt Arant from Arant Academic Planning, and our session tonight is about financial aid, all the key issues that you've encountered throughout the process with your students, and if you're a parent with your child. And I'm joined by a former colleague of mine at Franklin and Marshall, who is the Director of Financial Aid, Eric Kopp. Thanks for joining us, Eric.
Thanks for having me, Matt. Thanks for joining everybody.
So basically, how this is going to work, it's not your typical kind of panel in which I kind of facilitate asking questions. Rather, Eric is just going to give us the presentation. I will sprinkle questions throughout. As I put in the chat, please feel free to use the chat to ask any questions. I'll be monitoring that. And without further ado, let's go ahead and get started. So thanks again, Eric, for joining us.
You bet. Thanks, Matt. I'm going to go ahead. Hopefully, we're looking okay here. Well, my name is Eric Kopp. I'm the Director of Financial Aid at Franklin and Marshall College in Lancaster, Pennsylvania. I've been in aid at F&M for almost 11 years. I was in aid for 3 years at Elizabethtown College, which is my alma mater. And then I was in admission for 3 years while I was in graduate school over at Long Island University in New York, which is where I'm from originally. So I've been fortunate to have a 17-year career in higher education, and there's no stopping me at this point. So tonight I want to talk about really an overview of financial aid and current things that I'm seeing. Some of these things may be basic information for you, but this is kind of my normal presentation. And what I'd say is, I know Matt already said it, and I just want to emphasize that the Q&A and the chat would be great because there are probably things you're wondering about that are not going to be on here because this is a whole overview of the process. And whatever you're thinking is really going to help us have a great hour or so. I also want to make sure you know that this is not like a Franklin and Marshall presentation. I have plenty of stories about aid at F&M and how we do things as a highly selective liberal arts college that meets full need, but is what we call need aware or resource aware. But this is really an overview of how aid works. So let's get started. And, please interrupt me again with questions at any point. So we're going to do kind of a whole overview of financial aid here. And then when we get into things like packaging and stuff, you can feel free to ask me anything you'd like, or if there are any even really specific individual issues that you're seeing with families or your own family, I'm certain that will help us out. So we'll talk about the types of financial aid, how families are applying for financial aid today. Obviously, this is a positive year because the last couple of years I've done my financial aid nights. I've said to everybody, well, the FAFSA should be ready soon. Now I don't have to say that. It's been ready since the end of September, which is great and makes my job easier and everybody's job easier. Obviously, the CSS profile never has any lags like that, and that has also been available since the end of September. Talk about needs analysis a little bit and how financial aid packages are determined. And we will talk about special circumstances, educational loans, and take your questions. And honestly, the question that's in the chat right now, I'm going to answer it because Matt had already brought it up to me as well. How would you advise students whose parents have high incomes about submitting the FAFSA and or CSS profile? Um, well, I don't think there's any harm in applying for aid. I refuse to believe that families who will be no need are better off if they indicate no and decide not to pursue need-based aid from the institution. I tell everybody that it's great to have kind of a security blanket, if you will, whereas at F&M, if you apply for aid but don't qualify, you still have the opportunity if something happens to a parent, a job loss, and illness, you still have the ability as an aid applicant to appeal and receive additional funds from the college because of a change in circumstances. For those families that kind of have that assumption of if we don't apply for aid and that's going to help us get into the school better, number one, we make sure they're aware that doing so means that you will not apply for aid over the 4 years. This is not like we can apply to the college and say no to aid, then we'll get in and then we'll do the FAFSA and the profile. No, it doesn't work like that. So I think the worst case scenario would be having a student get in and then realizing that you're not permitted to apply for aid after the fact and then being unable to pay that first bill that comes out over the summer. So if parents have high incomes, I don't think there's any harm in doing the FAFSA and profile, especially if a school is need aware or resource aware. I can tell you if someone applies for aid and it shows that they're no need, that's just the same in the admission process as somebody who's, potentially just going to check off no on the Common App and not apply for aid whatsoever. And I'll answer one of the questions really quickly that just says for international students whose parents are looking for merit aid, how can they signal this to the school? Matt, I don't know if you have insights. I mean, FNM does merit for domestic and international
Hmm.
applicants, and for merit aid, there's nothing specific that
No.
our applicants
Yeah,
have to do.
oftentimes there is not a separate application for scholarships merit aid. So what you do is you apply to the college university and you're automatically being considered for scholarships, regardless of if you're an international student or domestic student. And going back to what you're saying about the high income parents, I guess the biggest thing I encountered when I was on the road as an admission person was parents telling me, "Oh, we make too much money. We can't qualify." Maybe that was the case 15, 20 years ago. But if you look on various schools' websites, they might literally have a breakdown of income level of applicant and how much financially they might be getting. So you might think that you're in that spot in which you're not going to get anything, but colleges have a lot, depending on the school, have a lot of money to disperse. So even if you think you're at that unattainable level, I saw plenty of families that would get maybe 10,000, fifteen
Yeah.
thousand, and the thing about merit aid too. So it's just kind of it's a misconception that if you're a certain tax bracket, you're shut out from financial aid, need-based aid from any school in the country. Schools have a big aid budgets, big endowments in which they can offer a lot of financial aid to those students.
Yeah, no doubt. I tell everybody to at least go through our net price calculator before they declare themselves ineligible due to income or another reason. Um, yes, if a student says yes to pursuing need-based aid, we typically will not render an admission decision if they haven't done anything. If they've
Yeah.
done a FAFSA and a profile, even before providing documents, we usually will make a decision. But if we have nothing on that student, yeah, we usually will hold up on an admission decision. And as I keep moving here,
But also
go ahead,
one more thing to that
please.
question. That doesn't necessarily mean that the application hasn't been read yet, because especially with a school that gets a ton of applications, they can't wait for every completed file in order to read it. So they may not render a decision, but they will have an initial read, and then it goes back to whenever it's completed, they can kind of go back
Sure.
and forth seeing does that decision change based, especially those need aware schools too. So it's a
Perfect.
little bit different there.
Gotcha. And I'll say this again when we get to my screen about the FAFSA. The FAFSA is still functioning every day despite the government shutdown. Now, I can tell you from my own experiences that if you try to place a phone call to the Department of Education, you may or may not get a person. Unfortunately, we had a student at FNM last week go on a leave of absence who was receiving VA benefits from a parent who had served in the military. The VA hotline for school certifying officials literally has that dreaded answering message that says that during the shutdown, there's nobody here to answer these questions. So the FAFSAs are still good. Schools are still getting those FAFSA files, which we call ICERs, every day. But if a family needs help and a school can't provide that assistance, and we've got to call somebody at the Department of Ed, it's kind of hit or miss. I was having an access issue. I did get an IT person on the phone, but again, specific things like the VA and federal student aid employees, you may or may not get a real person on the phone. But the FAFSA is still rolling every single day. So I guess that's positive news compared to what you might have thought my answer would be. So types of financial aid, some of this is pretty basic, but always a good thing. Anything on a financial aid package or financial aid letter or financial aid offer that has the word grants or scholarships, that doesn't need to be repaid. So when a family is kind of going through their net cost, it's usually looking at their direct costs, which is everything they're going to be billed for the year, and we're subtracting out the grants and scholarships that they're eligible for, and that's really giving you your full overall price point for the school. So again, direct costs, tuition fees, housing, food, taking away grants or scholarships, which is gift aid, doesn't have to be repaid back. That's how we're coming up with the actual cost for the school. Just about every financial aid package is going to have some type of self-help on it, which can be loans, work study, student employment, some combination of those things or all of the above. But really, when we look at the net price, we're taking the build cost minus the gift aid. How accurate is my NPC at F&M? I'll tell you why I think it's very accurate. Well, it's because we use the College Board to manage our NPC. Some schools do it in-house. Some schools use other providers. The College Board now has the ability, because we're a CSS profile school, which we use for IM or institutional methodology to come up with all of our need-based aid. There's one central site where I update our needs analysis each year with the College Board, and that's applying both to the calculator and to the CSS profile. So because of that, I'm very confident in our specific net price calculator at F&M. What I do tell families all the time is the calculator is as accurate as the information you put into it. So there's plenty of common mistakes, or if you put the zero in the wrong place, you can have a world of trouble. But if families are following the directions and looking at kind of the help bubbles, if they're answering questions from their right now would be their 2024 taxes, I'm very confident in the accuracy. And I've had many people kind of test it for us to make sure it's coming up with a very similar EFC to our CSS profile. And I still say EFC when I talk about the profile. Obviously, FAFSA, we're back in the SAI world.
So speaking of kind of that accuracy on the part of the household, right? Can you
Sure.
talk to us a little bit about how that works for international families? Because
Yeah,
obviously they're not using the domestic students forms. We have at FNM we have a specific aid form for it. So kind of walk us through what that
sure.
might look like and the kind of potential pitfalls in terms of accuracy.
Yeah, the good thing that we do at F&M is we do offer early estimates for really anybody who wants to request it. Whether or not they're truly serious about early decision, we're willing to do it. That goes for domestic or international students. For international students, they have one of two ways of applying for need-based aid through F&M. One is the international CSS profile. The other is an internal international aid form, which we are willing to provide to students if the profile causes a financial hardship for them. Because as far as I know, College Board is still not offering any type of um, kind of an automatic fee waiver like they are for domestic students under a certain income threshold. So if international students are serious about an early estimate, they can submit the international profile or do the international aid form. And we now will generate a letter for them. We used to say you have to do the profile no matter what if you want an estimate. But because the volume of our early estimates is not super high, we're willing to accept either or to generate a letter for them. And it's a great point that Matt made, because really that we as an institution do not have a net price calculator option for international students. Yeah, so they go through the early estimate process, but we're certainly happy to do that, and we have done that for several international families this
And
fall.
we'll talk about what that early estimate entails. And F&M's not the only school that does it. It's becoming more and more popular. So we can talk about that a little bit later.
Sure. Yeah. And again, it's not meant just for, there's a perception that we have. I think somebody asked me, is this just for athletes doing ED? No, not at all. It's for anybody who's even thinking that ED might be an option. Many families get an early estimate and decide to stay regular decision.
Mhm.
There's no pressure or requirement of that from us. I think it makes my job easier for the next several months. So I ask any family who's at F&M, why not go through the early estimate? Now that the FAFSA is available, you're basically getting a letter from us that says this is your year one financial aid package, because we fully meet need and our costs are already set for next year. we're more than happy to do that, and I know we're not alone in that, for sure. Student loans are obviously on the financial aid package. We all know what loans are. We do for international students. We actually offer a institutional loan program to kind of make up for the fact that they can't do the FAFSA. We really try to steer international students away from some of the private lenders that say, hey, we've got great loan programs for international students. They are completely devastating in terms of interest rates and things, and we can talk about that later. But that's obviously any type of money that must be borrowed and paid back, normally with accrued interest, unless it's a subsidized loan. Typically, 6 months after a student graduates is when these loans will go into repayment. If it's a parent loan, that's kind of a different story, which may begin required at least interest payments immediately after disbursement, which is the first day of classes. Financial aid can also include work study. This is the one type of aid that you're not going to see on a student's bill, but schools are required to list it as part of the financial aid package. This is basically saying that a student has the ability to pursue a job on campus. Our students get paid every 2 weeks based on the hours that they're working. We cannot force a student to put this money toward their bill with the college. We obviously say it's usually for incidental expenses. Students do have the ability to make a payment toward their account with the college, but again, it does not apply to the tuition bill. Our work study students typically work about 10 hours a week and get a paycheck every other Friday. So now we'll talk about how to apply. Number one is obviously that FAFSA. That is live. It is still working despite the government shutdown. I'm just going to keep saying that because I get that question almost every day. Can we still do it? Yes, absolutely. Um, Make sure you're doing it for high school seniors. We're doing it for 26, 27, not for 25, 26, or you have to go back and do it all over again. That 25, 26 FAFSA will stay live probably until about June 1st, because students do have the ability and right to file a FAFSA anytime before the current academic year ends. So if you're helping families who are applying to college, make sure that they're doing the 26-27 FAFSA. That is live now. I do finally think that now that things are working, we can call it a simplified FAFSA. Nothing seems simple about it the last couple of years, and schools were waiting and waiting. But now I do find that things are a little bit easier once you get in there. These are changes from the FAFSA that a lot of us were probably used to a couple of years ago. If you notice my 4 exclamation points, I'm very excited that it's available now. When I did this presentation and kind of talked with Matt last year, it was available January 1st with a question mark. So that's pretty cool. It is much shorter and more user-friendly. The average FAFSA is about 37 questions, which is very different from the CSS profile and also very different from the old FAFSA. You can now submit the FAFSA at once to up to 20 different colleges. That number used to be 10. Now it is 20. The FAFSA requires IRS direct data exchange. It used to be you have the option for what was called data retrieval. That would make things more accurate. If you get flagged for verification, it's a good thing. Now it is required. So basically, both student and parent have to grant their consent to have the IRS retrieve their information. If they don't give consent, the FAFSA is going to come to the school and basically say it's not complete. So both parent and student have to have their information retrieved from the IRS. Plenty of time, more often than not, the student financial portion of the FAFSA will come to a school and say no return on file. We expect that. Not every student is filing taxes. If parents say no return on file, then we may ask some questions or have them either do a non-filer statement, or the family says, well, I did file, but I filed very late. Then they've got to give the school what's known as the IRS tax return transcript, which shows that they actually did file for 2024. Let me see the question. How does direct data exchange work for international applicants? Our international students, if they are not US citizens or ineligible non-citizens, they're not able to do the FAFSA. So basically on the profile, they are self-reporting their income information question by question. So if If the student is a US citizen, but the parents are, say, international or they file internationally, then they're able to indicate that on the FAFSA and then self-report some of that information. But again, if the student is considered an international applicant, they're not doing the FAFSA. All
You mentioned
contribute.
listing up to 20 colleges on the
Yeah,
FAFSA now. Do the colleges have access? Can they see the other colleges mentioned? I think CSS, I think they might used to have that where you could put the other schools
yeah.
down.
Both FAFSA and Profile used to do this. Neither form does that anymore. So
Okay.
when we used to get 10 back in the day, it was kind of a funny thing that,
Yeah.
some enrollment analytic people would really be into. You could see the 10 schools and then see the order they were listed, and it
Yeah.
wasn't always alphabetical.
You can kind of
So,
work out, oh, maybe they're EDing here, then they're EA, and then
yeah,
RD just listed
yeah.
on the form itself.
That's right. Now we can't see that anymore,
Okay.
but we definitely used to. I can even picture the screen in our Power Fade software that used to show that. I mentioned earlier that the FAFSA now generates a student aid index. It does not generate what's called an expected family contribution anymore. The student aid index is not necessarily what a family should expect to pay for college, but that is the figure that's being generated for all schools. So regardless of how many schools a student sends the FAFSA to, their SAI does not change. They have an SAI and that's it. The FAFSA no longer considers number in college when determining SAI or what used to be an EFC. So this certainly can have an impact on Pell Grants because some families that would have been Pell eligible due to the fact that they had 2 or 3 children in the household in college may not be Pell eligible now because in that case, all 3 of those students are getting the full SAI assigned to each of them as if they don't have siblings in college. That is still reported on the FAFSA, but is no longer part of the calculation. So if schools are a profile school, they're still using number in college. If schools are not a profile school, then it's really up to them whether or not they want to consider that and maybe build something institutionally to award those students with more aid. But it's really an institution by institution thing because the FAFSA is simply not calculating that factor anymore as part of the SAI. So when I talk about the FAFSA and the profile does have a fee for each school. The FAFSA is obviously free no matter what. If somebody's paying for it, they're on the wrong site. The profile does have a fee for each school. I believe it's still $25 for the first profile, $16 for every school after that first one. The profile for domestic applicants does waive the fee automatically for families who have an adjusted gross income of under $100,000. So that's automatic when families go to submit it. As far as I know, the College Board is still not offering any auto fee waivers for international applicants. As I said earlier at F&M, we have kind of built an internal form for international applicants who might feel that the profile is a hardship for them. We're happy to accept either or. Both forms are using prior year tax information, which means if we're applying for the 26-27 year, we're looking at 2024 taxes on both of those forms. If you're looking at the profile, we are asking for the profile to be completed by both household A and household B. That means custodial and non-custodial parent information. So on the profile side, regardless of who the student lives with, we're still having both households complete a CSS profile for that student. And in our case, we're requiring tax documents for both families. The FAFSA has changed a little bit. The rule always used to be which parent do you live with more than 50% of the time? That's the parent that does the FAFSA. Not the case anymore. Now it has become the parent who provides the most financial support. Does that automatically mean the parent or parents who make the most should do the FAFSA? No, not necessarily, because I'm a dad, so I know that, a mortgage and rising grocery bills certainly mean I provide a lot of financial support. So there is a parent wizard tool at the beginning of the FAFSA for students who need to try to figure out which parent provides the most financial support. It used to just be who do you live with, and that has changed quite a bit.
Can you go back just real quick, please?
Sure.
So this question always kind of made me a little bit confused. The issue of home equity. Can you kind of
Yeah.
talk, and especially with kind of how the housing market is in a variety
Yeah,
of
it's
respects in terms of
sure.
geographic nuances. Can you kind of walk us through how that impacts these two
Yeah, of course.
financial aid documents?
Yeah, the thing I'm proud of is that we don't consider home equity at F&M anymore as like a viable asset for families. So there are plenty of questions that you might get on the CSS profile that schools are no longer using. I mean, families always ask me, and I would ask because they get this question. Um, we see everybody what they report are in their retirement accounts for each parent, but we're not using that as part of our needs analysis at all. It's just there. The FAFSA doesn't ask questions about home equity. The profile does. The profile will ask for the value of your home, the debt of your home, the year it was purchased, and how much you purchased it for. It will also ask questions about other real estate properties that you own, where the equity in those are still federally required to be treated as a parent asset. Um, Most schools have gone away from home equity. I say most to cover myself because we used to use it and we used to cap it based on the parent's income. We capped it at 1.2% of the parent's income and treated it as an asset. We have stopped for the reason that you said, Matt, that everybody's like Zillow values are out of control right now. So it is asked on the profile. It's up to schools how they want to do it. When we set those needs analysis, like I was saying on the College Board site, we're putting zero under home equity. So it's no longer used. It's no longer capped. I knew of one school that didn't cap it and use the full value, but I highly doubt that they're using it anymore. It's a great question. And because we're on this screen, and I think the next screen might be about, yeah, we'll answer the questions on the next screen. For a student who needs to do a non-custodial parent waiver, it's usually pretty easy. I can tell you at F&M, we have students just fill out the generic College Board non-custodial parent waiver form. That's available on the CSS profile website. We usually have them fill out that form, which has a section for a personal statement, and have students submit a third-party letter, typically from a school counselor, stating that, there's no contact with the parent or anything like that. When we approve that before the first year, it's automatically renewed for all 4 years. So that student's not going to be required to submit anything for their non-custodial parent. Yeah, that's a good point. Some schools may not require the non-custodial parent to do the CSS profile. That is a good point. I'm not sure if those institutions will kind of go by the FAFSA and have the parent that either earns the most or provides the most support to the profile. But yeah, there are some schools that can opt out of requiring any non-custodial information as well. And yeah, that final question is really, that would certainly be an extreme situation where you're doing that waiver, you're getting a third party letter with the waiver, like how we would do it. And then I don't see any reason our committee would not approve that. And then that carries forward for all 4 years. So never again would that student see any kind of ask for anything by the non-custodial parent. And as you see on the screen, if a school is FAFSA only, they're using the FAFSA for institutional funds as well. But the FAFSA is used across the board for state and federal grant eligibility, the federal direct student loan program, federal work study. And if a family is interested in utilizing the Parent Plus loan, even if there's someone that did not apply for aid from the institution, but they know they want to use it, that student must have a valid FAFSA on file. For the profile, schools are using that for institutional funds only. That's not a form that's permitted to be used to determine federal or state aid eligibility. And again, just like the FAFSA, the profile is live for both 26-27 and 25-26. Please make sure you're advising students to complete the correct year. The profile is about 300 questions long and is much more tedious than the FAFSA. So we want to make sure we're doing that correct year. The profile will ask questions about still that base tax year, which is known as prior year. So the profile is going to use 2024 income as the primary tax year for needs analysis, just like the FAFSA. This will also ask questions about things like, okay, what is your current year looking like? So how will 2025 end up for you? And then it also takes things a step even farther and says, okay, your anticipated year income, what's 2026 going to look like? You can answer questions about your monthly housing payment, medical and dental expenses. Again, it's up to schools how they use this information. I mentioned home equity. Um, just a lot more questions on the profile in general, probably close to 10 times as many as the FAFSA. So about 300 schools or so use the profile. That number did go up quite a bit over the last few years. Many schools that were concerned, rightfully so, about the FAFSA delays, including some public institutions in Pennsylvania, actually jumped on the profile because they didn't want to wait until January. And honestly, even though the FAFSAs were ready in January, most schools didn't get them until March. So I can think of a couple publics in Pennsylvania that signed up for the profile very late. So you might see some schools on there that surprise you.
And just to clarify on the
Yeah.
year in which to sign in, is that the
Mhm.
year in which the student is starting college?
Correct. Yes. So if you're a high school senior, yeah, you will always see both years active, especially in the fall. Whether you
Mhm.
have transfer applicants or latecomers or something, you can sign into either academic year. Unfortunately, if a family does the wrong year, like they're applying, they're high school seniors, and they say, "Oh, it's 25, 26, I'm going to do that one." That information can't be transferred to the next one. So we try to advise everybody, especially because this comes with a cost. Yeah. So you're applying for basically for the academic year to which you're applying. That's the FAFSA and the profile you want to submit for sure. So I mentioned this earlier, kind of talked about that math equation a little bit when I mentioned how you'd figure out your overall net price for the school when you take your direct costs, tuition fees, housing, food, formerly known as room and board, and subtract out your grant and scholarship eligibility. That's really the net price before we get into loans, work study, or any other financing option. But how do schools come up with your financial need? I said earlier, I say it a lot, that we're proud that F&M is a school that meets your fully determined financial need, institutionally determined financial need. Um, but schools can come up with need levels very differently depending on what they do and do not look at. So schools will use need analysis and they will take their cost of attendance. So that can include other indirect charges to build their financial aid budget. And depending on if they're FAFSA or profile, they'll then take that number and subtract out either the EFC or expected family contribution or the SAI from the FAFSA, the student aid index. And that is how they will come up with your financial need. EFC, SAI does not mean that's what a student will pay. Financial need also does not mean that's how much money a student will get on a financial aid letter. So the cost of attendance budget, which all schools are required to have, it's something the feds will look at, and it's something they'll use to come up with financial aid packages. This will consist of both direct and indirect costs for the academic year. Tuition and fees are obviously there. Our first year students also get charged a one-time orientation fee, so that's built into their COA budget. Room and meal or housing and food is also part of it. We're now required to make sure we include in the budget the meal plan that allows for students to eat 3 meals a day in our dining hall, or the all access meal plan. You basically have to build into the budget that students need 21 meals per week. We as an institution come up with a figure for books and supplies that can vary by institution. We use $800 for the year. It used to be a higher figure, but our faculty is very aware of book costs and things. So we now use 800 based on polling of students and what they spend each year on books and supplies. We use a transportation number, which pretty much every school does. That number varies based on where the student is coming from. So we're in Lancaster, Pennsylvania. If a student is from where I live, right near Hershey, they're not necessarily going to have the same transportation budget as someone from Miami, Florida, or Los Angeles, or Hawaii, or anything like that. So the budget can vary for student based on certainly if they're commuting or living on campus, and which state rather they're coming from. And we also build in a figure for miscellaneous educational expenses, which are just incidental things that come up throughout the academic year. So when you see a cost of attendance budget, that's going to include things you will be billed for, but also some assumed charges that the school is using to come up with the full financial aid budget and the package. I mentioned earlier when I talked about the SAI, when a student gets that ICER, which is the FAFSA file that gets sent to schools, and their student aid report, they're going to have the same SAI if they're looking at Franklin and Marshall College, which is certainly on the higher list of starting sticker prices, or if they're looking at a local community college, the SAI is exactly the same because that federal needs analysis does not change. If we're using the EFC, which is calculated from the profile and a school's own IM needs analysis, that can vary quite a bit. And these are what's used to determine what monies that students will get from both the college, the federal, and the state government as well. The EFC SAI is not necessarily what you're going to pay. This is the number that schools are using to come up with need eligibility. That's something I keep reiterating, that you may have a different EFC from each school, and how a school treats that EFC can also be very different. If a school meets full need, then their out-of-pocket cost is usually pretty close to what their institutional EFC is looking like. If a student has an SAI that's extremely high, but they get a huge merit scholarship, then they're already paying a lot less than what the federal SAI is saying. So this does not guarantee and should not necessarily deter a student because they see a number on a FAFSA that looks very high. How schools treat that can really, really vary. So this is an example. These are totally made up Mount Rushmore institutions in terms of what financial need might look like at two different schools. Obviously, these both look like private schools with cost of attendances of $50,000 and $80,000. So these schools are using the FAFSA only. They clearly don't have an EFC, so they don't appear to be participating with the CSS profile. So the SAI always remains the same no matter what. That direct data exchange was done through the FAFSA, and they've got an SAI of $30,000. At Jefferson, that family has a need of $20,000. At Roosevelt, that family has a need of $50,000. So while it doesn't mean that that's what you'll pay, the SAI is kind of giving this assumption prior to the packaging being done that this family should be able to pay about $30,000 out of pocket for the year. Again, not a guarantee, but for this exercise, this is how that number is being looked at. The need varies dramatically because the schools are very different in terms of their overall cost of attendance. So Jefferson is meeting that $20,000 need mainly with grants and scholarships, which is pretty solid. They're offering $2,000 in work study, which is a very normal number. Again, that doesn't get applied to the bill, but schools are still using that to meet their need level. Both schools are offering the standard student loan amount, which is $5,500. Every student, regardless of income level for their household, qualifies for the $5,500 just for doing a valid FAFSA. I will talk about the federal direct student loan, and I want to be mindful of time and questions at the end, but I will talk about student loans in a bit. Roosevelt has a pretty solid package in terms of gift aid. They're offering $35,000 in grants and scholarships. So already that sticker price is coming down quite a bit. But they're doing something that's a great example of something I really, really don't like doing. But many schools will do this. They will automatically put on a student's award letter an amount for a Parent Plus loan. That's a federal parent loan that a parent actually has to apply and get approved for. I don't think it's a very good practice. So this Roosevelt financial aid package here is a little misleading because it is assuming that that student has a parent that will be willing to apply for and then get approved for a Parent Plus loan. It is not automatic the way the student loan of $5,500 is just for having a FAFSA on file. So the Plus loan will require a credit check on the parent that's applying for that program. And then the parent kind of determines the amount they're applying for. If a parent does get approved, it can still be a pretty high amount. 7,500 would be on the lower end of what Plus loans have typically looked like through this year. That will change next year.
Are there
But I
fixed interest rates on those Parent Plus loans, or does it depend on the credit worthiness of the applicant?
Great question. They are fixed regardless of credit, where as long as they get approved. My You could have an 850 credit score or a 620 credit score, but if you're approved for the plus loan, everybody's getting that same interest rate. Whereas it's not like a private bank loan where you might get a better interest rate based on credit history or debt to income ratio. The one benefit of federal loans, whether it's the student loan or the parent loan, is you do get that fixed interest rate. It may not be your best rate, so I always advise shopping around when it comes to parent loans. But yeah, the fixed interest rate is there. But yeah, to your point, Matt, it's the same for all plus loan recipients. So if my credit score is a lot better than somebody else's, but we're both approved for plus, we're still getting the same exact interest rate. And if I have a great credit score, I don't necessarily want to just jump on the plus loan to get it done. I do recommend shopping around quite a bit. So how much money will you need? Remember that cost after gift aid is that net price that I'm going to keep focusing on. Our calculator also does this so that we show families exactly what the cost will be, even if there are some deferred costs through student loans. What is the cost of the institution after gift aid? So even though Roosevelt is a much more expensive institution, there we say again, don't get scared away by sticker price. They're 30K higher. Maybe that family says, I'm not even going to go visit there because they're so much higher than what our tipping point would be. Well, after gift aid, they're now only $7,500 heavier than a $30,000 a year school if you're paying full price. So this is something that any school's net price calculator should be able to put together for you. The total amount that you have to pay after gift aid is 37.5 versus 45K. So these are how schools can get closer. Roosevelt's much more expensive. They've offered a scholarship and a need-based grant to that student. So again, we're not getting scared away by sticker price. We're going through these schools' net price calculators. Maybe we're taking a step further and doing that early estimate of financial aid just to see where we come out before we rule a school out. Again, to reiterate, that parent loan is not something that I would recommend taking seriously if it shows up on a financial aid letter. Families are typically not applying for those until the summer, where these admit letters are coming out, now or really throughout the spring. That's one practice that I don't necessarily agree with, but I put that there because I see it quite often. Why did this school give me a parent loan and you didn't? Like they think they're at a disadvantage because it's not showing up on the F&M letter. We don't do that because we have no idea if a parent's going to get approved or be willing to apply for that, quite honestly. So these are just kind of some sample screens of what things might look like if you're going through the calculator.
And
Um,
also remember those flagship public institutions, those out-of-state tuition rates are nothing to sneeze at either in terms of
yeah,
cost. So just going back to sticker price is not just a problem of small private schools. It can be any really renowned state flagship public
yeah,
institution.
yeah, right on. These are the most common reasons for appeals. I always get asked, how can we appeal? When can we appeal? You can really let a school's financial aid office know at any point if something is changing in your household or that prior year tax return is not necessarily reflective of your current financial situation. These are the reasons that are almost guaranteed to get approved or to get more money for a student. Number one is if a parent loses a job. We have current students whose parents have been furloughed because they're federal employees. Those students are going to submit documentation, typically almost always get more aid. Loss of untaxed income or a benefit for a family, they're missing out on some kind of benefit for some reason. That might be another reason that a school offers more aid. If a family, two custodial parents are married and then they're going through a separation, even though as an institution we look at the non-custodial parent profile as well, there are allowances built into that to show that they're maintaining two households. So that's a reason we see a lot of successful appeals, unfortunately. And worst case scenario, but as a parent myself, it's something you always think about. an illness or the passing away of a parent at any point during the academic career is always a reason for appeal that really any school is just about any school would be offering additional funding. And students may all of a sudden qualify for a state or federal grant if any of these situations were to occur. Financial aid administrators are trained to utilize what's called professional judgment. We can actually update both the CSS profile and the FAFSA on our end when students have gone through our own internal process. So we kind of have a form. We ask for updated tax documents if it's something more recent than the prior year. And students do not have to go in and redo their entire FAFSA. We can actually make what's called a FAFSA correction when we have adequate documentation that any of these circumstances have occurred. Every financial aid office should have a process for that. The number one thing I can say is to contact offices individually. If students have applied to a lot of schools and they want to make sure these offices are aware that, the FAFSA and profile were submitted, but this is really not reflective of what's going on in our household right now. It can be a lot of work, but yeah, schools or students are recommended to contact each financial aid office because most schools have very different timelines and documentation. All of our special circumstance forms are internal forms that we've created at F&M. So there is no one uniform kind of federal form for when something like this occurred. But financial aid officers are well trained to go through this. And can a student appeal in a later year if they did not submit CSS FAFSA in year one? It is school by school. We tell our families if they choose not to apply for aid in year one, that we will make that determination in a later year on a case by case basis. I can tell you at F&M at least, if any of these things happened, especially, the passing away of a parent, yeah, we're going to say yes to that. But there has to be a documented reason. That's how we treat that. We do make families basically get an email acknowledgement. You applied no to aid. We want to make sure that was your intention. We want to make sure that you understand that unless there is an extreme change in circumstances, you will not be permitted to apply for the next 4 years. So that's why I still keep harping on that. And Matt and I were talking about this, off camera, applying year one. You're protecting yourself against something like this happening and then being told no. Um, a
And
friend's
also
counselor,
remember going
go
back to
ahead.
that notification of, are you sure you want to apply, or you don't, you sure you check no. In the
Mm-hmm,
admissions application process, whatever you call it, students and parents are getting emails, several
mm-hmm,
emails, making sure that decision is correct, right? It's not something you mess up one time and you never hear back again. It's going to be something that's part of a, depending on the school, an admission communication broadcast plan or whatever, which you'll see, oh, here are all the people that's checked no,
mm-hmm,
or they checked interest to yes, but they haven't submitted anything yet, they'll get that message. Or if they're
mm-hmm.
saying no, it's another thing just to confirm that. So it's not just like you you mess up, you check the wrong box once and it's game over. It's a very meticulous process in terms of notification by the schools.
Yeah, that's right. Now that we're on loans, this is a perfect next question. A friend's counselor convinced her to accept the student loan in order to help kickstart the student's credit history. I assume this would be the no interest loan, correct? Would you concur with this advice? Well, I will tell you that having a student loan that is paid on time can be a benefit for a student's credit for sure. I always tell the story about me and my wife. My parents both worked at colleges, so I had a tuition benefit. I did not have a student loan. My wife had a manageable student loan payment. When we went for our first mortgage, that was when I realized that she had a better credit history than me because she had student loans and I did not. I My advice that I give students is don't necessarily borrow unless you need to. If you really want to take out the subsidized student loan, which does not accrue interest, and you're making payments each month, yeah, I can support that. But so, yes, I concur with that advice if we're talking about, and I think the next slide will show that. If we're talking about, say, the federal direct subsidized loan, accrues no interest, until 6 months after the student graduates. That loan's just going to sit there with no required payments. But yeah, if a student's making payments on that and they have a loan in their name, yeah, it is going to help their credit. So it can matter. I mean, if students are going to be on their own after college and they're going to have credit checks run for auto loans or leases or anything like that, yeah, it's not the end of the world. My broad advice is, hey, don't borrow if you don't need it. But yeah, there can be a benefit if there's a small loan, and the thing is just awareness. Is there interest accruing? What's going to be required if I take this? When do I have to start paying? Can I make principal only payments? And usually the answers are pretty simple if we're talking about a federal loan. So I don't think that's terrible advice if a student doesn't have any credit history at all. That kind of did happen to me in my early 20s. I was fortunate not to have student debt, but then I also realized that I had no student debt, and I kind of inherited my dad's old vehicle, which had plenty of issues, but that's another story. But I didn't have an auto loan, I didn't have a student loan, so I quickly realized I had no credit. And what I had to do was get a credit card and start using it and paying it off every month. So yeah, there is some benefit to that. That's a fair question. So I want to touch very briefly on the federal direct student loans, just like the plus loan, which Matt asked about. There are fixed interest rates and this is set by Congress. So this is not unique to schools or anything like that. The subsidized loan is a need-based federal direct student loan that a student may qualify for. That's based on the SAI. So the maximum a first year student can get is 3,500 of the subsidized loan. That will not accrue interest while the student is in school. The interest rate is set now because once the student is no longer enrolled at least half time, the interest will start to accrue. Ideally, it's 6 months after a student graduates. If the student goes to graduate or professional school, this deferment will continue. There were questions as to whether or not the new the big beautiful bill would eliminate the subsidized loan program. It did not. That was a concern that a lot of schools had, including us. The subsidized loan program has not changed. The unsubsidized loan, which everyone's guaranteed for, regardless of income, assets, SAI, that will accrue interest basically starting on the first day of classes when the loan actually disperses. So the maximum for these loans combined is $5,500 for year one, $6,500 for year two, and then years 3 and 4 is $7,500 per year. The unsub loan is fixed and it stays there. But then year two, you get an unsub loan. That interest loan rate for that loan that year is going to be fixed, but it's going to be different. Congress doesn't necessarily come up with this until around July. And these numbers are capped regardless of how expensive the school is. Remember, I said the most is that years 3 and 4, 7,500 per year. The only way a student can borrow more from this federal direct student lending is if a parent applies for that parent plus loan and actually gets a rejection. So some students come in and say, my parents don't want to pay, my parents don't want to borrow. Can I just add more to this loan? No, is the answer, unless the plus loan is applied for and does not get approved. That is when we have the ability to add some unsub loans for students. And here's the plus loan. Matt said, is this a fixed interest rate, with credit score and everything? It is fixed. The interest rate doesn't change based on credit or income or anything. One parent is the borrower. So one of the two parents on the FAFSA would be applying for the plus loan. One thing I don't have on this slide, but that did come with the big beautiful bill, is that starting in 26, 27, there are going to be new caps placed on this loan program. In the past, if a parent was approved for the maximum, it could be whatever is left in their cost of attendance budget after any other aid. It is now going to be capped at $20,000 per year per student, with an aggregate total of $65,000 maximum. This is something we've tried to advise students of repeatedly, especially those who are in, say, their first year at F&M. Our formula says they can pay a certain amount and they're using a huge plus loan to finance most of their bill. That's not going to be an option for them in a future year. That is one big difference for undergraduate schools with the Big Beautiful Bill, which is now Big Beautiful Bill Act. But the plus loan used to be a loan program for parents that you could apply for the maximum. So if your cost of attendance is 80,000, if you got 20,000 in aid, in past years, that plus loan could be $60,000. Now we're capped at 20K per year. So families that are looking to finance more than 20K per year, you're going to need to counsel and advise students on private lending options. Private lenders are definitely beefing up their marketing tools and things, and they have stated overall that they're going to start kind of loosening up some of their requirements because they know that families that were typically used to borrowing these large plus loans now are going to be out of luck past that $20,000 a year cap. Parents will start paying typically 60 days after the first disbursement. So this is not something that can be fully deferred while students are in school because it is a loan in the parent name. But again, when you talk plus loan, remember, because we're starting to prepare for 26, 27, $20,000 is going to be the magic number starting with the next academic year. So this for now is the final year, the one that we're in, where you're going to see these much larger plus loans. At F&M, we have like 45 families that we've notified and said, hey, you financed more than $20,000 with this program. Next year, that's not going to be the full option for you. And my final slide, as we're wrapping up with financing, are private educational loans. These will be a much popular topic because of everything I just said regarding the plus loan caps. Some schools may have a lender list. What we do, because there are a lot of federal regulations about agreements with banks or credit unions, we use a website that a lot of schools use called Elm Select, Elm like the tree. We publish about 15 private lenders alphabetically, so we're not showing any kind of preference or favoritism. And just contact information, average loan rates, just reputable lenders that F&M families have used over the last few years. So that's something we're proud of, and it's a tool that we're going to be using a lot starting next year, because when a family was in a bind for a bill, the plus loan was always a really quick application, and even if they needed a lot for a year, they could do it and get the bill paid. Now with that $20,000 a year cap, families may be going through a much more laborious process with private loans. So we know if you've gone through a personal loan or a mortgage or anything through a bank or credit union, sometimes it's weeks to get an actual approval. They're looking at tax returns, W-2s, assets, personal statements about different things on your credit history. Whereas the plus loan was almost like just applying for a credit card. So this is where families are going to be required to shop around a little bit more if they're looking for those higher financing options. So this in my opinion for undergraduate schools is the biggest change with the legislation. Graduate students are going to be at a world of differences with borrowing regulations. I'm lucky right now that F&M doesn't have graduate programs, so I don't have to be as well versed in that, but I can tell you that the plus loan is the biggest impact on undergrad students. There were no cuts to Pell, or as I mentioned, that subsidized loan program, but the plus loan changes are the biggest one for undergraduate institutions. So that's kind of my hour of financial aid here. I will hang out, Matt. If there's any other issues you want me to touch on, feel free. But
Yeah, the
I
one thing I
appreciate
wanted to
everybody. Go
talk
ahead.
about is for the folks watching this that are counselors or parents, early decision is a very popular topic of discussion. So we talked
Sure.
about this a little bit earlier about the early estimate. So
Mhm.
I guess give us your thoughts about how financial aid interacts in that process for an early binding decision that ED is.
Yeah, we acknowledge that it is binding. I mean, I like I said, I beg everybody to go through the early estimate. Anybody I see at a fall open house or comes for a meeting, I say, please do the early estimate, unless you're in that great of a shape that the cost of the school is of no object to you. So what we do is our ED1 deadline is coming up. It's November 15th. Our ED2 deadline is in early January. So we offer this, we open up the request form in August and just say, hey, fill out this form if you'd like an early estimate of aid. You do the FAFSA, you do the profile, you use the College Board iDoc portal, which posts tax documents, And then we're actually generating a hard copy letter. And this is before you've signed the early decision agreement. Okay. The point of this is to do it beforehand. They're getting a letter from F&M that says this is what your year one financial aid is going to look like. So I think everybody who's considering early decision should go through that process at an institution.
And that's just
Unless,
need-based aid only, correct?
yes. And
Okay,
as a
because I know
school
some
that
schools
meets,
have adopted that with both need-based and merit, but it's kind of hard to forecast, especially if they don't have a hard and fast rubric for merit aid. It's mostly done during the application review process. So there are schools that offer both that need-based and in some cases a merit kind of snapshot
you're
too.
right. We are able as an institution, Matt, and I mean, this will be different from obviously when you were with us. That yes, the early estimate letter is need-based aid only. As a school that meets full need, that's why I think it's easier. We can say, okay, here's what your out of pocket would look like.
Hmm.
We do now offer. It's not the same, and it's not going to appear on a letter. But if students request a merit estimate from us, they can get a merit range. So we don't necessarily have a set figure, um, but we will say, okay, your merit will be between this and this. Typically, it's like a $5,000 or $7,000 gap that we're providing. But the early estimate letter process is going to be need based only.
Okay.
And I'm sure, yeah, I know some schools are including merit on that. We give a merit range separately. There is kind of a letter that families can get in an email, especially if they think, they're either not going to qualify for aid or they're going to be no to aid, but can I see if I get merit before I finalize that? That's fine. And
Mhm.
yeah, our early estimate is for need-based purposes. But we're doing a lot more with merit estimates and things, especially for early decision, and especially with the types of commitments and timelines that coaches seem to be asking for. Students really need numbers over the summer, and we can't collect any financial aid documents over the summer. So then it becomes okay, you can do the net price calculator, we can talk about it, and then admission might be able to give you a merit estimate. Can you tell if a family has done a net price calculator? That's a great question. So, yes, we don't have that information saved into our system. So, we can tell if a student has like logged in and done our calculator, they log in with a College Board user ID. We also can kind of track where a student is pinged on our website. So, yes, we can tell that. We also can tell that if a student is an athlete and it's over the summer or they're going through an athletics pre-read, Matt
Mhm.
was the expert on this, so he can interrupt me
Yeah,
and tell
and
me.
yeah, for the pre-reads, we would
Yeah,
require if they were going to apply for need-based aid, they would fill out a net price calculator. But it goes back to our conversation earlier, is accuracy of the information is in the hands of the family. So I had to operate under the assumption that what I saw in the NPC was what it would actually be. Sometimes it hit correctly, sometimes it
yeah,
didn't. So that's always kind of a subtle risk to take into account when you're looking at just a net price calculator as opposed to the advanced I guess
right.
form as an early estimate can provide a more kind of solid figure.
I was trying to think, Matt, of how many times you called me and said, this does this look right? And it's like the student contribution is super
Yeah,
high and the parent, and I said, no, I think they did it backwards. So
yeah.
yeah, that does happen. And if we're looking at the results page, we're not seeing what they input. Now, if a family says, I really want to know if my calculator is accurate, I say, hey, great, give me your results page, but then email me the 4 or 5 pages with everything you put in. And I can tell you if something looks out of whack. But a family has to really reach out and do that. We love the early estimate, but we also understand that the early estimate really can't be done before, say, October 5th. So if families are under a different timeline with whether it's with athletics or personal reasons, yes, the calculator is a good tool if you're accurately answering all the questions.
Yeah. Okay, it looks like there aren't any more
Okay.
questions, so I guess I'll go ahead and wrap up the recording now. So on behalf of Eric and myself, thank you for joining us this evening, and have a good rest of your day.
Good night, everyone. Thank you.